Kevin, Shane, Taras, if you guys have questions today or you want me to look at individual currency pairs or anything that you want me to cover, just let me know in the chat box. These sessions are here for you guys in order to get the most out of it. And sometimes that means interrupting me on the chat box and saying, hey, that didn't make sense, or could you explain it again, or could you look at this, or could you look at that? So please feel comfortable to do that. If you've got a question, I'm sure somebody else would have that too. Also, welcome to those guys watching the recording as well. Hopefully this is helpful. Today we're going to go through, as we do every session, Forex opportunities, and we might look at some cryptos as well, but we'll focus on Forex for today. Now, just to highlight where you can go if you have questions or you need help with support, you've got Becky at tradictive.com, which is here, and support at tradictive.com as well. So different email addresses there that you can use. There's also this link here, tradewithufos.com/Becky. From here, you can get courses and apps and coaching and things like that. And at the bottom, there's a question and answer section that might help you out as well, or you can ask a question there. So different places you can go, of course, for help. Now, what I want to do first is just look at some trades that we placed last time so we can see what happened and see how we might have managed these trades. So if you joined me last time, this will make sense in context of the trades we placed. If you didn't, this will still help in terms of understanding how we manage trades. So the last trades that we put on were back in March, a long time ago. But this is what happened to them. We placed 3 trades that day. We had a Bitcoin one. We had a euro dollar and a euro Canadian. So let's take a look. So on the day we placed, this was the 16th of March, we had a daily chart on the left, 55-minute chart on the right. The black line was our entry, the red line was our stop, and then we had 2 targets, these 2 green lines. As you can see, this one worked out in our favor. So we got in here at the black line. We nearly got stopped out, but price then moved in our favor. Very quickly hit our safety target and then moved on to hit our final target. I can't do the maths visually that quickly, but I guess that's a 10 to 1-ish, 8 to 1 maybe, that we would have got out of this trade. There wouldn't have been any management to do. We wouldn't have needed to trail our stop if we didn't want to. Everything was hit as it should have. The climate stayed the same. So that was a great trade. If you were in that one, then that worked out well. Of course, since then, we have seen Bitcoin drop quite drastically, but we would have already been out taking our profit before then. So that was that trade. No management would have happened on that one. We then had the euro dollar, and this was a weekly on the left, and therefore a 144 on the right. With this one, again, oh, that was back from October, so let me find the most recent one. That was here, great. On this one, we would have got into that trade, again, on the day. Actually, I think it might have been a daily. Oh, no, it was a weekly. We would have got into that trade on the day that we placed it. And we are currently on the way to our second target. But it's been quite a while that we've been in this trade, but there's actually nothing to do here. I'll just find my rat there. We triggered at this point, hit our first target very quickly. Price came back, but still nothing changed in terms of the climate, so we would have stayed in it, and it's continued its way on the way to our final target, although it's taken quite a while. Now, you could, if you want to, trail your stop behind UFOs. So this is helpful where, let's say in this case, and I'm going to squish price up a little bit so we can see what we mean. In this case, on the way down, on the way towards our final target, we've had new UFOs form, new sets of sellers. So let's say we take our stop loss from here and we put it behind this first stack of sellers, this closest stack of sellers. Because if price were to come against us, more than likely, if it pushes through the sellers, we no longer have probability down. So we get out at that point. So you could do that, but at the moment, there's no need to. Also, if things were to change with the climate. So let's say price moves up quite drastically, and this changes from a thick red dot to a thick blue dot or a thin dot, then we'd get out manually and take our profit there as well. At the moment, again, nothing to do with this one. The final one we looked at last time was the Euro Canadian. And And again, this was a trade that seems to have gone in our favor. So again, let's squish it from when we put this trade on. So we would have entered the trade at this point here. Everything would have been lining up for us to place the trade. We wouldn't have cancelled it. We'd have taken our safety target at this point. And again, nothing's happened for us to have to do anything differently. Again, we've come very close to hitting our final target, but not quite. So again, we're just going to wait for it to come back down and hit our target, or you may choose to trail your stop and take your stop loss from up here to just behind the closest stack of sellers. So if price were to move against us and stop us out here, we'd take profit at that point. So different places we can take profit depending on how actively we're managing things. If the auto climate were to change, and again, let's say it becomes a thick blue dot or a thin dot, maybe we get out at this point manually and we take profit there. Maybe we've trailed our stop loss, it's behind some sellers, and we automatically get stopped out here. Perhaps we completely leave it and we don't do anything, and perhaps we look at it in a month and we've been stopped out at our original stop. That would be a shame. At least we'd break even. We wouldn't lose anything in that situation. But obviously, hopefully, it moves a little bit lower and hits our target. So different ways to manage our trades. Now let's look at new trading opportunities. And again, just for those that joined newer to the room, if you have particular timeframes you want me to look at, particular markets you want me to look at, by all means, let me know. I'm here to be guided by you and go and look at what you want me to look at what is relevant to you guys. So let me know in the chat box. Otherwise, I'll keep an eye on the chat box, but otherwise I will let our lovely scans guide us as to where we're going to be looking. I'm going to start with a higher time frame, so daily climate to start with. So it's swing trading time frame for our basically for our decision making, whether we're buying or selling. So I'm going to look at these ones first and these ones. And then once we've run out of those opportunities, we'll go down to smaller timeframes. So let's have a look at what we have in front of us. We can already say that we have no opportunity at the moment on a daily chart on our majors. And that's because we're looking for yellow boxes that say near sensible, long or short, that also have either a blue or a red box here. We don't have that here. So we're going to move straight over to look at this set. So we have, first of all, the Euro Canadian. On a daily chart, we have a near sensible short here. So let's go and have a look. Again, it's got a red box there. That's what we want to see. So let's have a look at this one first. Euro Canadian on a short on a daily chart. Now, something to be aware of before we get cracking is actually our economic calendar from FX Street, just to see if there's going to be news coming out that may affect us that we might want to be aware of. So we'll look at major currencies that we'll be trading. Yeah, we'll keep those things. And I'm going to tick high impact and apply it. And we'll have a look at what's coming out for the next week or so. So again, what this does is it gives us an idea of what news might be coming out that might affect us. So today, everything's already happened. This is in, I don't know why, GMT +3. I don't know why it's in that time zone, but fine. Tomorrow, we have some news coming out on the Australian dollar and New Zealand dollar. So maybe we avoid that today. And again, New Zealand dollar news coming out on Tuesday next week. So for now, we'll just try and avoid the Aussie dollar and the New Zealand dollar. So we're fine to look at the Euro Canadian. Now, as we've already got a trade on here, I don't want to confuse things. So I'm going to look at it with a different broker. So we're going to look at it with Oanda instead of FXCM. Make sure, though, that you are using the data of the broker that you use. So we have daily on the left. We have 55 on the right, and we'll look for trading opportunities. Now, first and foremost, before we even start, we are not going to look any further, and let me explain why. For those that don't know, auto climate here basically tells us where the probabilities lie, up, down, or nowhere. And then we have an idea of whether or not to buy, sell, or do nothing and move on. So in this case, we have a thick red dot on auto climate. That tells us probability is down. However, what can stop probability to the downside? We've got lots of sellers pushing down. What's the only thing that can stop that? Buyers. and lots of them. And that's what we see here with our auto climate. So here we have lots of buyers. In fact, we are within lots of buyers right now. So we've got conflicting information. We've got the auto climate pushing down, and we've got buyers here pushing up. That means we don't have clear probabilities to one side or the other, so there's no point trading. Just seen there a question from Andrew. Do you consider the location of a trade, i.e. if the price is threading the EMA in the middle of price action on a 4-hour chart? Good question. So we use a 9-point EMA. For us, normally, and you'll notice actually with the way auto climate works, if price keeps going through the EMA and it doesn't seem to have a rhyme or reason where it stays on one side or the other, auto climate will pick that up anyway. It's part of the calculation it uses, and therefore tell us with these thin dots, don't trade. So that's kind of already taken care of by auto climate. We don't have to do any visual analysis there. Auto climate considers that when it tells us where the probabilities lie. So if price keeps coming through like it did here a little bit, and it does that, auto climate gets to the point where it says, hey, avoid it. Don't do that. So we can use that in that way. Now, most of the time, if price is below the EMA, we have a thick red dot. If price is above the EMA, not in this case because of the way it behaved, let's find a thick blue dot to make the point. If I can find one back in time, there we go. So in this case, price was above the EMA most of the time, or at least closed above the EMA, and we had a thick blue dot. So we can use the auto climate to help us with that. Okay, so we won't look at any trades with this one because we have buyers and sellers essentially at the same place. If we have buyers and sellers at the same place, who knows who's going to win that fight? I'd rather keep out of it and look for a new opportunity. So we said we would avoid the Australian dollar and the New Zealand dollar for now, so that takes out these first two. Let's now look then at the Canadian yen. Got an opportunity there to the long side, it would seem. So let's have a look at the Canadian yen and go from there. So let's look at that with FXCM. Again, just make sure it doesn't matter what platform you use. I get this question a lot, which platform's the best? It depends where you are in the world and how much money you've got and usability of the software, all that kind of stuff. The most important thing is that you're comfortable with it and that you use the data that is relevant to the markets that you're trading on those brokers that you're trading with. If I give you entries and stops that are based off of FXCM data and you go and copy that over to Oanda, you might get stopped out where I might not, or vice versa, just because the spread will be slightly different, the pricing will be slightly different. Okay, so we need, in order to place this trade, we have a thick blue dot telling us probability is upwards, and we have pretty much, so the EMA is 100.354. We have pretty much prices at our ideal trading price. We want to buy at that EMA price only if we have buyers on the right hand side in the same area. So we need buyers at current price in order to be able to place the trade. We don't have buyers at current price on this time frame, but let's have a look at the 60-minute and see if we do. We do not. Close, but we do not. Let's have a look at the 120. Nothing there. And let's go one step slightly lower and look at a 30-minute. Nothing there. Brilliant. So we've looked at 4 different time frames. We don't have any opportunity. There's no point, in my opinion, cycling through every time frame. We want to look at 2 to 4 that are within a reasonable range that makes sense to be paired with our left-hand side chart. So from Andrew, this is a kind of example of my previous question. We have a thick blue dot, but we're in the middle of price action. Yes. So thick blue dot, probability is up. Price action is on its way back down towards the EMA. If we were to have the lineup of what we want, so let me just draw it out to show you. Let's say we had, let's say we had a UFO here. And so the EMA would be within that UFO. Then this is brilliant. We like it that price is moving towards us because it's moving towards an ideal entry price, which is the EMA and the UFO combining. In this case, they're obviously not combining, and therefore not an ideal trading price. But again, we would like it that price is moving towards us because it tells us that we are likely to get into a trade soon, providing we have all of our probabilities lining up. At the moment, we don't, so no point trading. Hopefully that makes sense, but let me know. I'll keep my eye out on the chat box. Okay, so no opportunity there. We said we'd avoid the New Zealand dollar. So it looks like nothing left here in terms of probabilities. Now we can have a look, and I would just recommend a couple of things here. If we do place trades on these markets, just to say, we know there's news coming out on the Aussie dollar and the New Zealand dollar. So let's definitely avoid the Aussie New Zealand, but we're using slightly bigger timeframes. So hopefully the news doesn't have as much of an impact as if we were using smaller timeframes. But what you might want to do is place the trade, cancel the trade just before the news comes out, and then put it back on after the news has come out and the market's already moved, if the trade is still valid. So we can go and have a look, but just bear in mind that you might play it that way. So Aussie Swiss, let's have a look. Hopefully we'll find an opportunity to place. Okay, so we'll look at different timeframes again to see. We'll start with a 55-minute. See what we have here. Oop. Okay, so it looks like, oh, unfortunately just out here, but let's show you. Thick blue dot, probability up. Our EMA price is 0.6952, which is here. Now we want the EMA price to coincide with the UFO. And at this point, they're not coinciding, they're just coinciding. They're near each other, but they're not coinciding. So nothing on this time frame, but let's take a look and see if we have anything that works out better on another time frame. And I'm looking through 4 time frames. Nothing there. I'm looking through 4 time frames. You'll notice, and let me just show you the time frames or draw out the time frames I'm looking at. I'm looking at everything from a 120-minute, a 60-minute, a 55, which is the Fibonacci version, and a 30. So you'll notice it's not like I'm using a daily on the left and a 1 minute on the right, or a daily on the left and a 2-day on the right. I'm keeping it within timeframes that are smaller than the left-hand side, but not too small, within a reasonable range. So hopefully that makes sense. But despite looking at those different timeframes, we don't have a lineup, so we don't trade. Let's avoid the Aussie New Zealand because that's too much in one place. Let's look at the Euro New Zealand. So all we're doing is we're checking out the opportunities that the scans are telling us that where we might have a more likely probability. And then we're placing the trades if we have a lineup with our rules. If we don't place the trade. If we do, we do. And if we don't, we just move on and look for another opportunity. It's very mechanical. It's very objective. There's no, what would be the word? No subjectivity here, no bias here. It just is what it is, or it isn't what it isn't, and we do what we do as a result. Okay, so we want, ideally, and we'll find it if we can, we've got a thick blue dot, probability up. The EMA price is 1.6543, so about here. So we don't have any UFOs combining at the moment on this time frame, but let's have a look and see what we might find. Nothing there. Let's check this one. Nothing there at all, it looks like. And let's check the 30. 4-3. No, okay, so unfortunately not lining up on this one. I'm going to go through it quicker without stopping to explain, hoping to just find an opportunity first, and then we can break it down bit by bit. So let's look at the pound New Zealand one. Now, before we look at this, depends on where our buyers are, but we would want to make sure we get out of the trade before we hit these sellers anyway. So we have, oh no, we don't, just not. Let's have a look. Brilliant, great, we have a trade here on the 55-minute chart. And that should work if I just draw this out. So if you heard that noise, that was TradeStation telling me the market's open. That should work. We've got enough room to take it here. So brilliant. Let's break this down. We have a thick blue dot, probability is upwards. We have an EMA price of 1.9497, which falls within this UFO here. This UFO is full of buyers. So we are essentially buying with buyers, with more buyers at the EMA price in the context of a buying environment. We've got three things lining up to tell us that that's a good place to be buying. Now, we might be wrong, which is why we use a stop to protect ourselves, and we want to know where we're going to get out. So we're going to have two targets, a safety target and a final target. But let's first just figure out what our entry and stop would be. I'm just going to bring up the order panel as well. So I'm just going to bring this up. I know it's a fib retracement. I'm not using it as it is intended to be used. I'm using it as a drawing tool just to help me to see more clearly when we come and look back where our entry and stop was and where our targets are. So where do we put our entry? Where do we put our stop? The UFO gives us these prices. So those sort of olive green colors. We've got 1.95277 and 1.94867. Those are the two prices where we have the range of where buyers are. So buyers are between those two prices, essentially. So what we're going to do, we're going to take the top number, 1.95277. We're going to round it up to the closest pip, so 1.9528. And we're going to add a couple of pips for the spread. For our stop loss, we're going to take the bottom number, which is 1.94867. In this case, because it's a sell order, we're going to round it down. So we're going to round it to 1.9486. And then we're going to take away 5 pips for a little bit of wiggle room. And that's going to be our entry and our stop. The safety target will work out. The safety target is always 1-to-1 away. So we'll use TradingView here to help us. I like TradingView for this reason. It does my maths for me, which is which I'm happy about. Oh, I did that run the wrong way. I will always risk $50 per each side of the trade only because it's an example. You guys risk whatever you want to risk. It's not up to me to tell you where you or how much you risk. It's up to you to decide. So TradingView's done our maths for us, and our target one will be at 1.9579. So just to show you here, our safety target is before we hit the sellers. So that's why we know we've got enough room. If our safety target was within the sellers or beyond the sellers, then we don't have enough room because the sellers would come in and change things before we even have time to hit our safety target. But in this case, we do have room. So let's put that half on. I've just seen a question. That's a really good question there from Andrew. I will come back to that in a second. Let me just place the other half of this trade and we'll clarify that. So the final target, which is where we will take this to its furthest probabilities, we are simply going to use this sell UFO and we're going to get out just as it starts. So it starts at 1.96208. Just going to round it down to 1.9620. And that's going to be the second half of the trade. So we're going to have the same entry price, the same stop loss, the same risk, but our profit in this case is just going to be that precise number. Let me put that trade in. Now, very good question there from Andrew, which was about auto climate. So let me just pull this up so we can have a look and I can show you what I mean. Brilliant. So I made this really big, but just to make this point. So we have a thick blue dot, which tells us probability is up. That's the main foundational point of autoclimate, to show us where the probabilities lie. But we also have extra statistics on autoclimate that give us different probabilities and give us different information that we can then choose to act on or not in different varieties. So let me just take a second to explain this. This first number tells us how often that market usually goes up for. So in this case, it's 5.49 candles. So let's just round that up to 6, because you can't have 0.49 of a candle, right? So 6 candles. So it usually goes up for 6 candles. This number tells us how long it usually goes down for. So again, 5.36, that would make it 6 again. And this last number tells us how long the market is currently going in the direction that it's currently going in. So usually goes up. Oh, I don't know what's happening there to my mouse. Sorry about that. Usually goes up for 6 candles, but we've currently been going up for 7 candles. So what that tells us is we've gone past what's usual in terms of a move to the upside. And Andrew's got a very good point to say, surely we should avoid doing that, right? Autoclimate is showing us that we've gone past what's usual. Surely we should avoid doing that. This depends on our subjectivity in a way when we trade. So I know I've just said we want to be objective when we trade, so let me clarify what I mean. When I say we need to be objective when we trade, it means that us as individual traders, we need to have rules that we stick to all of the time. And it either hits that rule or it doesn't. And we either take the trade or we don't. That makes it an objective thing. But in clarifying those rules in the first place, in building our trade plan in the first place, we need to craft that around our subjectivity to a point. So in this case, the stricter you are on what that number needs to be, for example, you could say, if the market goes up for 6 candles in a row, I will only place the trade if it's 3 or below, so that I know I've got room to take it to where it normally would go to. That's a stricter view. That's a more conservative way of trading. What that means is you will have less trades because you're adding an element that creates more of a barrier to placing a trade. But more than likely, the trades that you place will have greater probability. You could be someone on the other extreme that says if it usually goes up for 6 candles in a row, actually, I don't care. I'll take it wherever it is because it still has probability up and I don't care what that number is. That would be a less conservative way of trading or a more risky way of trading, but could still work out for you. It would mean that you place more trades because you have less barriers in the way, but the trades that you place will likely have less probability. So there's a balance to be had. You exchange one for the other. In this case, and what we would usually do in sessions, but of course, again, it depends on the individual, we will still place the trade as long as it's not twice that number. So if that 6 usually goes up for 6 candles, as long as this is, oh, sorry, I pressed escape there, but as long as this is, if that's 6, as long as this is 12 or below, we still place the trade. Now, what you could do is you could say, if it's greater than 6, but less than 12, I still place the trade, but I reduce my risk. That's one way you could apply that. So it depends where you fall on that spectrum of conservative trading versus risky trading, or more risky trading, as to how strict you are on this rule. So hopefully that makes sense. This is also true, by the way, of all of the other rules that we talk about, of all of the other indicators that we use, all of the other things that we use. You could be somebody that says, I'm going to use autoclimate and the first UFO, and I'm going to completely ignore the EMA. Fine, you'll have more trades, but they'll be less likely to work out for you. That doesn't mean you lose money, by the way. If you have more trades that have less probability, they could still overall be profitable trades. You could go the other way and say, I'm going to have autoclimate, I'm going to have the UFOs, I'm going to have the EMA, and I need the Fibonacci retracement to coincide, and I need fundamentals on my side, and I need whatever else on my side. And therefore you have less trades, but higher probability that they work out. You might end up making more than the person that has more trades but less probability. You might work out actually making less because out of 10 available trades you only place 2 and the other person's placed 10. 5 of theirs work out, 5 of theirs lose, maybe both of yours win, but depending on the ratios might depend on actually how much money you make in the end or lose. So I know, by the way, that this is often quite a frustrating concept. We like to be told what to do. We do it this way and that's what you will do and this is why you do it and 100% you should. I personally don't take that approach in the markets because I think I know there are hundreds of ways you can be profitable in the markets with loads of combinations of variables that are put together in different ways. The most important thing is, especially when you start, you have a foundation, and that's what we hope to give you. But the most important thing is that you end up enacting a trade plan that makes sense to you, to your profile as a trader, that you will then continue to execute objectively. So if there's a rule that frustrates you or doesn't make sense to you, don't use it. Find a way around it and just back test or demo trade in order to test your theory, whatever it is. So great. I'm glad that makes sense. All right. Okay, brilliant. So Andrew's also saying about the different colors. Thank you, Andrew. You're giving me lots of content here to go into. Let me find a random market just to maybe show what we mean here. Brilliant. So we'll all go and look for new opportunities as well, because I know a lot of people join these to just find new opportunities, but hopefully going through the theory sometimes as well helps to make sense of what we do and why we do it, and gives you that spectrum for you to go, oh yeah, okay, I'm probably the more conservative version, therefore this is what I'll do. Or, oh yeah, actually, I'm less conservative, I'll go the other way and that works for me too. Or no, cool, I'm fine to be in the middle somewhere. Hopefully it gives you the context in order to choose where you fall. So the comment here from Andrew was about taking the dark green UFOs versus the olive green UFOs. Essentially, the dark green show us that we have slightly greater probability. The light green or the olive green have slightly less probability. But they both have enough probability in order for auto UFOs to show them on the chart. So again, what you could do if you're not sure and you say, I want to take the dark green ones or fresh ones, if you want to call it that. I only want to take the dark green ones. I'll avoid this one. What you're doing is you're adding an extra layer in the way that will stop you from being able to take certain trades. That means you have less trades, but they're more likely to work. Same kind of principle we've talked about before. If you want to review trying both of them and saying, I'm going to take the UFO regardless of the color, providing that the EMA lines up, which is how we approach things in our sessions, then if you're unsure of that or you've not done that before and you want to test it, just back test it, I would say. If you know how to back test, just back test it and you can prove the point either way. Or demo trade. If you don't know how to back test, demo trade it, trying both sets of UFOs and see what happens. And again, help to prove your own point either way. Either I should be that strict or I don't need to be. So hopefully that helps. Okay, so now let's go back to TradeStation. Thank you, TradeStation, for your help there. And we are going to have a look at a new opportunity. So we just looked at the pound New Zealand, I believe. So let's look at New Zealand Swiss. Bear in mind, by the way, if you've just placed a trade on the pound New Zealand, then you would be doubling up to also trade the New Zealand again. So bear that in mind. You might not want to take both. Now, as far as FXCM are concerned, we don't actually have probability here, but let's have a look at Oanda. No probability there either. Interesting. Okay, no trade. I've gone here just to explain why I've said that. That's a thin dot on auto climate. That tells us not enough probability in either direction, so we shouldn't be trading it. For some reason, it's come up on the scan, which is strange, but fine, we're not trading it if we don't have probabilities. Okay, let's move down a set of time frames. We're going to now be using the 240-minute on the left-hand side. Hopefully, it looks like we've got a couple of opportunities with the majors. I usually show the majors on MetaTrader just to show you how it looks. So let's use MetaTrader to do this. And we'll start with the dollar Canadian on a smaller time frame. So those of you that use MetaTrader, this is what it looks like to use the UFOs here. So we'll just give it a sec to collate itself and figure itself out. So we have the 4-hour on the right. So in theory, we should have the 21-minute on the left. However, we don't really have that room here. So we're going to look at the 30-minute or the 15-minute. That's what we're going to look at here. When we go to TradingView, or if we go to TradingView, we could, of course, look at more intricate timeframes. But based on assuming some of you are using MetaTrader, I'll use it as it shows. So it looks like, just visually here, we do already have an opportunity, but let's see. We have let me just pull this down so we can see it. We have a thick red dot, probability to the downside. The EMA price, which is shown up here, is 1.2833, which is literally just underneath this UFO. Now, because it is only just underneath this UFO by 1 pip, if price moves up, and it would need to move up by 18 pips, 17 pips, in order to reach the UFO, it's likely that the EMA will move up at least a pip to fall into this UFO. And therefore, we will take this UFO. It works for us, all lining up, and we have room to take it to our closest stack of buyers. So we have an opportunity here on the 4-hour chart to look at this. So I'm just going to write this down in my notes so I remember to come back and look at this next time. So this was a 1 day and that was a 4-hour. Great. So let's now go to TradingView to finish placing this trade. We've looked at MetaTrader to show you what it looks like. Looks slightly different, but it's showing you the same thing. And we'll come back to TradingView to finish it because, again, for me, I much prefer using the maths that we have on TradingView. So we are going to ignore, in fact, I'm going to hide the UFOs there on this, in this case. We're going to ignore the UFOs that we have on TradingView for now, because we're going to go with assuming that you guys are using MetaTrader. So we're going to use that data. So coming back to MetaTrader then, that means, and I'm going to write this down so I don't have to keep coming back, the entry price is 1.2834. So we're just rounding down that entry price. Oh, it looks like we would have just been hit now, but we've still got time. Our stop loss is going to be 1.28472, round up to 48, plus 2 pips for the spread, plus 5 pips for wiggle room. So 1.2855. Let's now go back to TradingView. Oh, we're on the wrong thing on the right hand side here. Let me just make sure we're looking at the right thing. Great. Cool. So our entry was 1.2834, which actually we might as well do 35 because we're already there. Our stop loss is 1.2855. Put this in. So we're essentially, it looks like we'll get triggered almost immediately. We're essentially going in at market, but we'll put it in for pip above where we're at now. Our profit target, first of all, is 20 pips away, which is going to be 1.2815. So let's just put that in there. Oh. 1.22815. Now the second half of the trade, let's just come back to MetaTrader quickly. We're going to use this number, which is the start of our buyers, 1.27718. I'm going to round that up to 1.2774. So I've rounded it up to the closest pip and then added 2 pips. So 1.2774. I'm going to draw that on the chart. 1.2774. And that's going to be the other half of the trade. So same entry price, same stop loss. Oh, hold on, that's modifying this order. We don't want to do that. We want to add the next one. Same entry price, 1.2835. Same stop loss, 1.2855. Risk is $50. Again, just for my example, you guys risk whatever you want. Or don't take the trade at all if it doesn't fit your rules. And that's the other half of the trade. Just going to put a little note on here to remind me next time when it was placed 18th of May, 4 hours and 30 minutes. So based on the time, I don't think we've got time to put on a new trade, but let's just highlight what we've done now. So we have placed 2 trades this session. We've looked at the dollar Canadian on a 4-hour chart on the left, and we had a 30-minute chart on the right. And in this case, we had a thick red dot. Probability was down. Our UFO was here, and this was coming from data on MetaTrader, and our EMA, as we expected, as price moved up, actually did move just inside our UFO. So everything lined up as far as we're concerned with the main rules, the foundational rules. If you had further rules that said the auto climate needed to be a certain thing, that would actually fit that anyway, because we're at the start of this move. Maybe you have other rules that say fundamentals need to be on your side or other indicators need to cross, then in that case you may or may not have placed this trade, but based on the foundational rules that we have, we got into this trade. Then we had the pound New Zealand. Looks like we've just been entered into that trade, by the way. The pound New Zealand on a daily chart. We had a daily chart on the right and a 55 on the left. So just making a note of that for myself for next time. So 1 day and 55. And with this one, we haven't been triggered into this one yet. We used TradingView for this one. And again, we had, let's show the UFOs in this case. We had thick blue dot, probability up, EMA number falling within our UFO. We bunched a couple of UFOs together actually to do this, and we ended up with a trade that we've placed that lines up with everything. If things change before we get entered into the trade, let's say price goes off and then starts to move back, but by then the EMA doesn't line up or the auto climate has changed, we cancel the trade. In a trade that we're already in, let's say this gets triggered and everything's still lining up when it's triggered and it goes in our favor. The only reason we would ever get out of the trade manually before it hits our predefined targets is if auto climate changes, or if you're choosing to trail your stop as well to lock in profits as price moves in your favor. Okay, so we went through a lot today. Thank you, Andrew, for your questions and for going through that. It hopefully helps to give other people a lot of context as to why they might do certain things or not. And people might be looking at it going, what's the difference between those colors? And it gave us the chance to do that. Or what do those numbers mean on auto climate? Where are they coming from? What's the point of these? So it really helped to hopefully give other people some context. So thank you for asking those questions. It's always good to have people engaged in that way and hopefully make these sessions a little bit more relevant to what you guys need. If you have any questions, if you're watching this recorded or you just think about it afterwards, please email me. It's becky@tradictive.com. We also have this link here, tradewithufos.com/Becky. You can get the different apps and courses and coaching here. We will soon be filling this in where our live sessions, we're going to put these trades in so you can track them. And at the bottom, you've got a question and answer section as well. Other than that, thank you for joining me today, guys, and I will see you next time. I assume it will be in June sometime. I'll see you guys soon. Happy trading. Take care. Bye-bye.